Ladies and gentlemen, thank you for standing by. Welcome to the Sapiens International Corporation fourth quarter and full year 2018 results conference call. At this time, all participants are in a listen-only mode. A brief question and answer session will follow the formal presentation. For operator assistance during the conference, please press star zero. As a reminder, this conference is being recorded February 26, 2019. It is now my pleasure to introduce your host, Mrs. Yafa Cohen-Yifra, Sapiens CMO and Head of Corporate Communications. Mrs. Cohen, you may now begin.
Thank you and good day, everyone. Our quarterly earnings release was issued before the market opened this morning, and it has been posted on the company's website at www.sapiens.com. Representing Sapiens today are Roni Al-Dor, President and CEO, and Roni Giladi, our CFO. Before we start, I would like to remind everyone that this conference call may contain projections or other forward-looking statements, and the safe harbor provisions in the press release issued today also apply to the content of the call. Sapiens expressly disclaims any obligations to update or revise any of these forward-looking statements, whether because of future events, new information, a change in its view or expectations, or otherwise. Also, during the course of today's call, we will refer to non-GAAP financial measures. A reconciliation schedule showing GAAP versus non-GAAP results has been provided in our press release issued before the market opened this morning. A replay of this call will be available after the call on our investor relations section of the company's website or via website link, which is available in the earnings release that we published today. I will turn the call over to Roni Al-Dor, President and CEO of Sapiens. Roni?
Thank you, Yafa. Today, I will start with review for fourth quarter, comment on our progress in 2018, and close with our plan for continued excellence in 2019. At the beginning of 2018, we laid out our strategy for returning to growth based on 4 key objectives. Deliver double-digit growth in our P&C line in EMEA and APAC, expand our North America P&C businesses, maintain and support our life and annuity customers, and lastly, increase cross-selling to our existing customers. This objective served as an excellent roadmap, and I am very pleased with successful execution demonstrated by our 2018 revenue growth and operating margin expansion. Revenue for the year grew 6.7%, coming at the high end of our revenue guidance. Synergies and cost control produced a 71.2% increase in annual operating income, and we exceed our operating margin guidance. Our global team worked very hard, and as a result, in 2018, we signed 25 new logos, and we had 33 customers go live. I'm very pleased with our strong finish of 2018, closing out the year with another quarter of improvement growth and profitability achieved by maintaining our focus and executing in our key objectives. In the fourth quarter, revenue totaled $73.4 million and operating profit increased 19.7% to $10.9 million. Top-line growth came from increase in our P&C businesses in key geographies and stabilization of our life and annuity segments. The margin improvement drove a 27.4% increase in net income. Roni Giladi will provide more details on our financial result in his prepared remarks. We continue our double-digit growth in EMEA region for P&C, signing new deals and expanding our relationship with existing customers. During the quarter, we announced the Ecclesiastical Insurance Group in the UK selected both the Sapiens IDIT suite for property and casualty and Sapiens Reinsurance to replace Ecclesiastical's existing insurance system. The EMEA market remained very active, and we have a strong pipeline for businesses for 2019. We are confident that we will continue our momentum in this region. Meanwhile, in North America, we enhance and expand our U.S. P&C businesses by following the same successful strategy we employed in European P&C market. In 2018, we fully integrated the operation of both Stream and Adaptic, and we launched a P&C insurance platform with fully integrated core suite. We had a very productive fourth quarter with several new customer wins. Hertford Mutual Insurance Company selected our North America property and casualty insurance platform, citing the system configurability and ability to achieve self-sufficient as a key winning to this client. In November, the Preferred Physician Medical Risk Retention Group also select our North America P&C platform as it is solution for professional liability insurance. Overall, we improve our competitive position. We accelerate our go-to-market timing, and we fully expect to increase market share for this region. We have already signed new deals with this enhancement platform, and like EMEA, we have a strong pipeline in the U.S. for 2019. And in order to support the anticipated growth, we extended our U.S. management and sales team. In life and annuity, we made significant progress by focusing on top-tier support for our customer base. Our life businesses is comprised of three solutions: core solution, complementary life solution for underwriting, electronic application and illustration, and consolidation master for the management of run-off businesses. In 2018, we maintain our growth in our complementary life solution, which gained Sapiens' new customer win in the region. During this quarter, we went live with Catholic Life Insurance, one of the top 10 fraternal benefit society in the U.S., which launched Sapiens' electronic application for its life and annuity businesses. With our core solution during the quarter, a current life and annuity customer, a Tier 1 South African bank, expanded use of Sapiens' core suite for life and annuity with addition of annuities and funeral businesses. This customer originally chose us in 2015, and they have been in successful production with us ever since. On the product front, in December, we announced enhancement to our core suite for life and annuity, with enhanced core functionality, improved features, and new digital capabilities. These new features allow our customer to easily create and rapidly launch product. The recovery of our life and annuity business creates the foundation for growth in 2019. In addition, we see increased demand for our consolidation master solution, and our pipeline is building nicely, as in our complementary life solutions. Moving to our North America decision management activity, during the fourth quarter, a top-tier insurance in U.S. selected Sapiens Decision, our business decision management solution that now includes underwriting and product creation capabilities to modernize its insurance application and provide the highest level of services to its customers. Lastly, on cross-selling to our existing customer, in the past few years, we significantly expand our solution and services offering with new product development initiative and focus acquisitions. In 2018, we made a strategic decision to build a new team to evolve our previous customer support model from a siloed by business support approach to what we are now fully integrated customer success team that support all of our product lines. We recruited several key executives in 2018, and we will continue to expand this team in 2019. On the marketing front, at the beginning of February, we announced complete rebrand highlighting our evolution to a unified global provider for insurance software solution. Sapiens Solution Portfolio now features for more descriptive product names to help prospective and existing customers understand our solution. We redesigned our website and marketing collateral to reflect Sapiens' human-to-human, edge-to-edge approach to build stronger relationships with customers and improve communications about the capabilities. I'm happy to share with you that since the launch, we are receiving positive feedback from our customers and from the industry experts. Our investment in R&D and enhancement across our platforms are paying off with new customers win and increasing businesses with existing customers. It is also lead recognition from industry experts. Last December, Sapiens was recognized as a leader in Gartner Magic Quadrants for non-life insurance platform in Europe for Sapiens IDIT suite. We were positioned in the leader quadrant based on our completeness of vision and ability to execute. Sapiens Centralized Digital Division, which collaborates with InsurTech and partners to develop new insurance solutions, has significantly enhanced our non-life offering to Europe. On the digital front, we focused in 2018 on enhancing our digital offering and leveraging our digital division. Today, we offer a comprehensive digital solution that is fully integrated with our core solution, including customer and agent portal and digital hub that facilitates an open communication, API-based platform which enable carriers to interact with InsurTech companies, ecosystem technology providers, and business partners. Sapiens Open Architecture ensures seamless interaction with any service under any technology, allowing providers to easily choose the building blocks they need and integrate these elements into their own insurance ecosystem, enable success today and securing a stronger competitive position for the future. Our digital unit plays a critical role in supporting our sales and marketing teams, who are already responding to an increase in demand for our digital solution worldwide. So overall, a good end to successful 2018. I would now like to turn the call over to our CFO, Roni Giladi, to provide more details on our financial results. Please go ahead, Roni.
Thank you, Roni. I will begin my commentary with a review of the fourth quarter results, followed by the full year results, after which I will provide some commentary on the balance sheet and end with our 2019 annual guidance that we introduced in our press release earlier today. Revenue in the fourth quarter of 2018 totaled $73.4 million, up 1.4% from the fourth quarter of 2017. Our revenue in North America totaled $34.9 million, represent 47.6% of our total revenue. Revenue in the region increased by 10.7% compared to last year, but slightly declined compared to previous quarter due to delay in operational milestone that is expected to be reversed in the first half of 2019. Revenue in Europe totaled $30.9 million, an increase of 3.6% compared to last year, and represent 42% of our total revenue. South Africa revenue declined compared to last year, mainly due to the change in scope of the project that we mentioned on prior call. The project, as originally planned, will not continue. We will have a small revenue stream throughout 2019. Moving to gross profit. Gross profit this quarter totaled $31.3 million compared to $29.5 million in Q4 of last year. Our gross margin this quarter increased to 42.7% from 40.7% in the fourth quarter of last year. Operational costs, R&D and SG&A in the fourth quarter was essentially flat compared to last year. Our operating income this quarter totaled $10.8 million or 14.8% compared to $9.1 million or 12.5% in the fourth quarter of 2017. Our operating margin this quarter continued to improve compared to last year and compared to previous quarter. Net income for the quarter was $7.8 million or 16 cents per diluted share, compared to $6.1 million or 12 cents per diluted share in the fourth quarter of last year. While our revenue grew 1.4%, our net income this quarter increased by 27.4% compared to last year. Our adjusted EBITDA this quarter totaled $11.8 million, reflecting 16.1% of total revenue for the quarter. Turning now to the full year results of the 12 months ended December 31st, 2018. When we began the year, we stated that our 2018 priorities were improving our non-GAAP operating margin and improving our long-term organic growth. I'm happy to say that we successfully achieved our goals, and I will review our progress on both of those fronts. Our annual 2018 revenues were $290.3 million, up 6.7% compared to $272 million in the prior year, and reaching the high end of our guidance range of $285 to $290 million. Our organic growth in 2018 was 3%, taking into account four elements. 1. $14 million impact of the new M&A of Adaptic and Knowledge Price. 2. Additional 2 months of Stone River revenues in 2018 compared to 2017 in the total amount of $13 million. 3. $18 million impact of the reduction in revenues, mainly from Japan and South African customers. 4. And positive impact of the currencies in the amount of $3 million. When analyzing our 3% organic growth this year, we see 3 trends. 1. Our P&C revenues grew double digits this year, continuing the positive momentum that Ronnie discussed earlier. 2. Life and annuities revenue declined as we anticipated. And 3. The rest of the business remained stable. Moving to operating income. Our operating income in the full year was $39.6 million compared to $23.1 million in 2017, an increase of 71.2%. Our operating margin was 13.6% compared to 8.5% in 2017. The improvement in operating margin was primarily due to 1. 2 cost reduction programs we implemented in 2017, and mainly delayed program in 2017 that affected 2018 results. 2. The completion of the integration of Stone River, which we acquired in 2017, which resulted in doubling Stone River profitability. 3. The increase in our offshore activities for both delivery and R&D. Operating margin improved sequentially throughout the year from 12.5% in Q1 to 13.2% in Q2, 14% in Q3, and reaching 14.8% in Q4. Tax expenses in 2018 were $7.3 million, representing an effective non-GAAP tax rate of about 20.6% compared to 24.3% last year. The main reason for the decrease in our tax rate is due to USA corporate tax reform, which reduced our blended tax rate. We expect our 2019 tax rate to be at the range of 21 to 22%. Net income for the year was $28.1 million, or 56 cents per diluted share, compared to $15.5 million, or 31 cents per diluted share in 2017. Net income and EPS increased by 80.6% compared to last year. Turning to our balance sheet. As of December 31st, we had cash and cash equivalent of $64.6 million compared to $71.5 million in 2017. Our strong cash position and improved profitability enabled us to pay dividend once again to our shareholders. And in October 2018, we paid a cash dividend of $10 million in total, or 20 cents per share. Total debt by the end of the year was $78 million, and in January 1st, 2019, we paid the first annual principal payment of our Series B debenture in the amount of $9.9 million. The remaining of the debt will be paid over the next 7 years. Total trade receivable as of December 31st was $59.2 million compared to $53.2 million in 2017, reflecting an increase of 7 days in DSO from 68 to 75 days. While we see improvement in DSO of accounts receivable, unbilled receivable DSO was increased due to payment milestone, which we anticipate part will be converting in the first half of 2019. Net cash provided by operating activities this year totaled $27.7 million compared to $9.2 million in 2017, reflecting increase of $18.5 million. I would like to turn now to our guidance for 2019. In 2019, we anticipate non-GAAP revenue in the range of $318 to $323 million, and non-GAAP operating margin in the range of 15.2 to 15.6%. On the revenue side, we expect continued double-digit growth of our P&C revenues, with our life and annuities revenue stable with a positive outlook, and the rest of the business expected to be stable, again with a positive outlook. Overall, we expect our organic growth this year to be approximately 10%, with the growth accelerating throughout the year. We expect the growth in the second half of the year to be stronger than the first half. I would like to remind you that Sapiens' long-term growth strategy is a mixture of organic growth and M&A. After a planned slowdown in M&A activities in 2018, we started in 2018 our scouting for M&A opportunities that are aligned with our overall growth strategy. Our operating margin is expected to increase by 180 basis points. The margin improvement is anticipated to come from 1. Gross margin improvement due to the headcount expansion with offshore operation, where we can grow the team very cost effectively to support our delivery efforts. To accommodate that, we plan to expand our facility in India with further capital investments. 2. In addition, increase in revenue with leverage coming from improved economic of scale, with our current infrastructure able to support higher top-line growth that will allow us to improve our operational margin. As we said in the past, our midterm operation margin goal is to be in the range of 15 to 17%, and in 2018, we expect for the first time to enter this range. To summarize all, 2018 was a transition year for Sapiens, and we plan to be back on track with growth and margin expansion in 2019. I would like now to turn the call back to Roni Al-Dor for closing comments. Roni?
Thank you, Roni. As I said earlier, we recently announced the launch of our new brand architecture to reflect our evolution into a unified global provider of innovative digital solutions and to position the company as a partner for our client success, with an improved competitive position as a one-stop shop for insurance software solution and enhanced product platform. I'm looking forward to another year of advancing our global position. We are building on our foundation for growth and leveraging our investment made over the past few years. Today, we are strongly positioned with a wide range of insurance platforms, technology-led services, brand post-production, and we offer enhancement digital solution while collaborating with insurtech partners. Our winning business model of product and services enable us to advance our long-term relationship with our customers. Our 2019 priorities are continue to expand our P&C businesses in North America and EMEA, grow our life and annuity business, and margin expansions. We are executing on our strategy to drive sustainable long-term growth, increase profitability, and improve shareholder value. I would now like to close our prepared remarks and open the call for questions. Operator.
Thank you. Ladies and gentlemen, at this time we will begin the question and answer session. If you have a question, please press star 1. If you wish to cancel your request, please press star 2. If you're using speaker equipment, kindly lift the handset before pressing the numbers. Please ask your question in a loud and clear voice. Your questions will be polled in the order they are received. Please stand by while we poll for your questions. The first question is from Mayank Tandon of Needham & Company. Please go ahead.
Hey, good morning. This is actually Kyle Peterson. I'm for Mayank today. Thanks for taking the question. Just wanted to see, in terms of the P&C growth outlook for the year, will that be kind of split pretty evenly between North America or Europe, or kind of how are you guys looking at the geographic growth for the coming year in P&C?
Hi, this is Ronnie G. In 2010, we saw double-digit growth on the P&C in Europe and rest of the world, while we see growth or single-digit growth on North America P&C. As we look at 2018, we see both of the area growing double-digit growth. We have some indicators coming from recently from the state where we signed several deals on the P&C side, and we have very good pipeline to continue. So we are confident on the double-digit growth on the P&C in the state. And in Europe, as we are continuing the trend that we have in the past, this will continue going forward. So basically, evenly, both of them double-digit.
Great, that's good color, thanks. Good to see the acceleration in North America. And then just wanted to touch on the life and annuities business. I know you guys mentioned stable with a little bit of a positive bias. Just wanted to see your overall thoughts, just what it might take to be able to return to a little bit of positive organic growth in the life and annuities piece.
Hi, this is Roni Al-Dor. We have in the life and annuity 3 types of solution. One is our core, what we call today Sapiens Core Suite for Life, and we have the components, including illustration and underwriting, and we have the run-off business, is calling today Consolidation Master. The 2 areas that we plan to continue to see growth between single and double digit is the component and the run-off. In our core suite, we still see a business mainly from Europe. This is what we made a decision in 2018, and this is going forward. So the overall is growing, but not as high growth like the P&C.
Okay, great. Thanks. And the last one for me, then I'll hop out. Just wanted to touch and see if you could give any background on the M&A pipeline, what you guys might be looking for, whether it's specific capabilities, geographies, product offerings, any color would be great.
Hi, this is Ronnie. As we mentioned, in 2010, we had a decision to slow down our activities into the M&A, focusing on operational and building the foundation of organic growth. As we close to end of the year, Q4 of 2018, we started the scouting process in the company, looking basically from 3 angles that you mentioned, either additional complementary solution, customer base, and also geographic expansion, territories that we do not have present today. We are on early stage, and we are looking to do so, and hopefully we can announce something in 2019. But right now, I'm very, very early stage.
All right, great. Thanks for the color. Good quarter, guys.
Thank you.
The next question is from Avishai Kantor of Cowen. Please go ahead.
Hi, good morning and good afternoon, everyone. My first question, so we're talking about 10% organic growth for the year, stronger second half versus the first half. And you mentioned that the reason is I would say delays in some ramp up within U.S. clients. Are we talking about one specific client or a handful of clients?
I Avishai, this is Ronnie G. We are talking about a specific customer on specific item. I do not see this something across the board. Very specific that we convert on the first half of 2018.
Okay, thank you for that clarification. And then you've been able to, throughout 2018 and what seems to be going forward into 2019, you've been able to post very nice gradual margin expansion despite, as you characterize, continuing investments in U.S. sales and management capabilities. Obviously, this is coming from back office and delivery capabilities. How much more levers do you, and you were talking about moving some of the functions to India. How much more lever do you have in the business model to support that margin expansion?
Hi, again, this is Ronnie. Our guidance of 2018 basically take into effect additionally acceleration or lever in the model. We have significant staff right now doing delivery, but we would like to accelerate also the R&D part. This will also improve our margin going forward. And also, without the offshore, as we scale our business and grow the revenue, we have some economic of scale that will improve margin. Our mid-term range is 15-17%. We think we can achieve this in the midterm. 2019 will be the first year that we are entering this range with the range of 15.2 to 15.6. And as Q4 already is at with 14.8%, we are in reach with this range.
Great. And then is the accelerating U.S. pipeline driven by new or existing clients? Is it driven by your strong marketing efforts in the second half and then the rebranding? What's driving it?
I think the first part is coming from the new customer. We see a lot of promising opportunities coming on the PNC platform on the state. As Ronnie mentioned, we also establish a customer-centric team that will supposed to approve or increase the revenue from existing customer. I think we'll see this increase in revenue, potential revenue, towards the second half of the year, but right now what we see is more on the new customer coming on.
And my last question for the team, can you give us a sense on cloud-based wins for your platforms? I mean, do we see an acceleration in the ratio or the mix of cloud-based platform contracts?
Yes, the answer is yes. We see more and more interesting in a cloud solution for all of our products. So the answer is yes.
Okay, and I assume this is another long-term lever to your margin expansion?
Yes.
Great. Thank you so much, and good luck in 2019.
Thank you.
Thank you.
The next question is from Tavi Rosner of Barclays. Please go ahead.
Hi, good afternoon. Congrats on the solid quarter. All of my questions were basically answered. I guess I just had a follow-up on the M&A one. Before you made that comment that you're looking into additional M&A next year, I mean, given your 10% organic growth, I somehow assume that you would also take 19 as a break. So I guess looking at where your balance sheet is, would you go into taking debt if you saw an interesting opportunity on the M&A front?
Hi, Tavi. This is Ronnie. So as we mentioned, we'd like to wake up the third level of growth in the company, and the 10% is only organic, and we'd like to accelerate it. We are right now focusing on token M&A, not big M&A, and we think we can, the cash position that we have, allowing us to do this acquisition. In case we'll see something which is a bigger opportunity, we always the opportunity either to look at equity or debenture. Today we have a debenture of about $80 million spread over 8 years. Will give us a lot of flexibility. And if we look at our EBITDA for next year, we are being close to $50 million. and obviously the ratio EBITDA to a debenture is very low, can increase the debenture. So both angles are open to us, equity or debenture. If we see big M&A, we consider at the time, but currently we are looking on token M&A.
That's helpful. And maybe just a broad one on life and specifically on the core aspect. I mean, we spoke about the decline last year already. I'm just curious, fundamentally, how you explain that. Is it just kind of insurance company postponing their investment decision into later of time, or simply they realize that they have, digital alternative these days and they can just stay with their legacy core and then, they'll figure something out later on?
Hi, Tavi. This is Roni. When we entered 2018, we set a specific goal to our life division to focus, first of all, on existing customer. We basically put all the effort, not searching for new opportunity, but to maintain our existing customer that some of them were going live and some of them are basically in pre-production phase. And obviously when post-production phase come, obviously there is some decline in revenue. This is the event that happened to us in 2018, basically on the core life business. So right now we are on level that the customer are post-go live and basically the revenue is stable. During that,
very helpful, yeah.
Yes, during that, we continue to look for opportunities. We have some pipeline in the life division, mainly on the run-off business, mainly on the complementary solution, but also very few on the life. We are right now working on that, but right now we'd like to be conservative, and we are mentioning the business is stable.
Thank you, Ronnie. I appreciate it.
Thank you.
Thank you.
The next question is from Justin Furby of William Blair. Please go ahead.
Hey, guys. Thanks for the question. Nice quarter. Just to start off, in the P&C business, can you remind us what percent or give a sense for the coming in as cloud deals versus people hosting on-premise? And then in terms of the success that you're starting to see there in North America, what kinds of insurers, I think, are you resonating most with in terms of the sizes, whether it's commercial, whether it's personal lines, just any more color on North America and what you're seeing there would be helpful. And then I've got one quick follow-up.
Yes, in the P&C, hi, it's Roni Aldor. In the P&C in North America, we have a few type of solution. The workers' comp is going for the state and for the tier 1 clients. And our core solution is mainly for tier 3, 4, and sometimes tier 2. All of them are looking for cloud and hosting as a smaller company is more interesting for them. On the reinsurance, we are also seeing more tier 1 client, tier 2, tier 1 type of clients.
Super helpful. And then if you look at Europe, I'm just sticking with P&C, any notice that Brexit is having some sort of impact in the market, in the UK specifically? Obviously, I'm just curious what you're seeing there. And then what areas within Europe specifically are you seeing the most pipeline build on the P&C side? Thanks.
Okay, so we don't see any impacts of the Brexit until now. In terms of tiers, we are in Europe, we are mainly moving towards tier 2, so tier 3, 2. And the Nordic is very hot area for Sapiens as well as UK. We are also start to see some deals in the DACH area, mainly in DACH, but also we are working what we call rest of the world. We are working also in South Africa and Asia Pacific. So those are the areas that we are working right now.
Okay, great. And then Ronnie G, on the acceleration and growth, maybe I missed it, but is it sort of single digit growth in the first half and double digit in the back half is sort of what you're pointing to, or any more color there would be helpful? Thanks.
Hi, Justin. So obviously if the 10% is a blended one, you will see the first half slightly below and the second half is higher. This is what we meant when we talked about growth for 2019.
Okay, fabulous. Thanks, guys, and I'll see you next week. Cheers.
Thank you.
Thank you.
If there are any additional questions, please press star 1. If you wish to cancel your request, please press star 2. Please stand by while we pull for more questions. There are no further questions at this time. Before I ask Mr. Al-Dor to go ahead with his closing statement, I would like to remind participants that a replay of this call is scheduled to begin in 2 hours. In the U.S., please call 1-888-295-2634. In Israel, please call 03-925-5918. And internationally, please call 972-3-925-5918. Mr. Al-Dor, would you like to make your concluding statement?
Thank you to our operator, and thank you to all the participants for joining us today's call. Have a good day.
This concludes the Sapiens International Corporation fourth quarter 2018 results conference call. Thank you for your participation. You may go ahead and disconnect.